traders, it is good to see you. This is Rob Reinhold. We are now done with the first week of October. We are going into the second week in October. Let's talk about the week ahead. In this session, we're going to go over last week's news. We're going to look over the broad markets, and then we're going to see if do we have a new score for all of the sectors and for the markets. Then we're going to take that information and find the best trades in each sector. Long, short, sideways, it doesn't matter. We're looking for everything.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
Let's break down last week's news first, close the door on it so we can understand what's going on with this week. We had two ugly days on Monday, Tuesday. Wednesday, we recovered. Thursday, we fell apart and recovered. And Friday, we gapped down and recovered and ended up having a really nice day on Friday. So what we had is we had a lot of exhaustion, and we see this in both the dollar and the bonds. So if you take a look at the charts here, you can see that they have been going higher for so long, they just ran out of gas. Lots of long upper shadows, and we are seeing the exact same thing on the other side of the stock market. Lots of long lower shadows. We have been talking about how the bond market and the dollar are driving this market, and they took a little break. Now, we got some news last week that was really mixed and confusing for the markets. First thing we got was ISM manufacturing at 49 was slightly better than expected. And you can see the price is down quite a bit. So that report, pretty good. And then on Wednesday, we got the ADP employment report. Look at this number. It was supposed to be 154,000 jobs. It came out at 89,000. Now, the market liked this number. They said, hey, this is a good number. It's going to make interest rates back off. And they did a little bit, and the markets bottomed out on Wednesday. Then the next morning, they got unemployment claims way stronger than expected at 207. And the market sunk a little bit, recovered off that news. And then on Friday, take a look at this payrolls report. Expectations were for 171,000 jobs, 336. This is a huge number, and initially the market tanked. Take a look at that chart. It tanked. However, we bottomed out. The unemployment rate did go up. Average hourly earnings went up, and we actually ended up closing near the highs of the day. So huge intraday reversal. Initially, this news was taken negatively, but look, we've seen this before. When everything is priced in and then the news finally comes out, you typically don't get any more follow through to it. I think that's exactly what happened. The dollar was already really high. Bonds were already really high. The news came out, and there was just really no gas behind these moves whatsoever. So let's take a look at the trades last week and how they did, and then we can wrap the week up. Last week, we had a $300 butterfly on Facebook, on Meta. And depending on when you close this trade out, it was either a great trade. I know I closed my trade out in the morning at about 3:03. So it was a very nice trade. And if you waited all the way to the end of the day, it was a max loss. So very rarely do you see a butterfly go from pretty much max gain to max loss throughout the day, but this was one of them. So based on when you got out, would determine your profit or loss on this butterfly. We had a diagonal call spread on PDD. We were in the 95-100. So a diagonal call spread. It is a mildly bullish trade. Mildly bullish, and 100 was our max gain point. As you can see, this thing zoomed way past max gain. And I closed out the entire trade for a small gain. So I bought this spread at about $5. I sold it at $5.80. I held on to it for a week. So look, that's about a 17-18% gain for a week. That is the bad part of doing diagonal call spreads. You are capping your upside. You're getting a lot of benefits, but if you do get a stock that takes off like this one did, it's only a very small gain with diagonal call spreads. We had a bear call spread on Alcoa. We had a 27.30 bear call spread on Alcoa. And you can see this thing did exactly what we wanted it to do. Alcoa was down 6.5% for the week. We do have one more week on this trade. We need this thing to close under 27 for max gain. So this trade looks really nice. We also had a bear call spread on Teladoc. We have an 18-19, very, very tight trade here on Teladoc. This trade also has one more week. You can see this trade didn't go anywhere for the whole week. It was up, I think, 0.5% on the week. So next week, we need to see this move down. If it moves up, it'll be max loss. If it moves down, it'll be max gain. That's the beauty about vertical spreads. You don't have to care about it. You just position size for max loss and let it go. Let's jump into the markets and see what happened across the board last week. We take a look at the Dow. The Dow was down for the week. The S&P up about 0.5%. The Qs up almost 2% for the week. And the Russell down 2% for the week. All over the board for different returns. And we'll take a look at in the sectors. We'll see two sectors did really well last week and everything else kind of floundered. Looks like we've got oil and gold mixed up. Gold going down 8% would be a huge move, but that is what the move oil had. Now, this is on the back of a 5% loss last week. So oil is down almost 14% over the last 2 weeks. It has gotten absolutely hammered. Gold down another percent. It also has been sliding with the strength of the US dollar. Let's take a look at this chart. And I really want to focus on this week. So we had Monday's candle. It was a gap down. It didn't really go anywhere. Tuesday, ugly day. Wednesday, we tried to recover. Thursday, we had this really confusing candle. And I did the video at the end of Thursday, and I talked about how we like to see really strong bounces off these bottoms. And I said, this isn't a good candle. It's not a bad candle either. It's really nothing. And you can see on Friday, we got the absolute confirmation that we were looking for on Thursday. We had reached another swing low. So look, we all know how markets move. They go down until they stop going down, make lower lows. So here is the question. And again, this is the $25,000 question. Is that the bottom, or do we have another leg or two down lower? Look, nobody knows. But I'm going to give you my opinion. Over the last 2 months, we started talking about this in August. We started warning our traders in August, hey, look, we're coming into the worst 6-week period of the whole year, September 1st, which is right here, to October 15th, which is going to be at the end of next week. We said you need to watch out, you need to be careful, because this is when the most market crashes have happened. And these are the weakest 6 weeks of the entire year seasonally. We got the word out. And again, our traders have done great. You guys have done great. The market is clearly bearish. There's no doubt about it. But we have to step back and say, okay, where are we in the big picture of things? We expected there to be weakness from September 1st to October 15th. We have no idea if the weakness is going to keep going or not. We have no idea. But if we played it, if we called for weakness during these 6 weeks and we got it and we played it and we've had a nice return off of it, we kind of got to stick with that belief that after October 15th, we are now out of this seasonally weak period and we're actually moving into a seasonally strong period for market returns. Now look, the markets don't have to do any of this stuff every year. It can do whatever it wants any year. But on average, this is typically what we see. I think that was the market low for these 6 weeks as far as weakness goes. Now, look, I could easily be wrong. Here is the problem, though, of that statement I just made. That is my opinion. Now, as a young trader, I used to trade my opinions. And sometimes they were right, and sometimes they were wrong. I've been trading for 26 years now, and I do not trade my opinion. I trade the charts. And right now, this is saying, I can say this is nothing more than a bear rally, just like the one we had last week. Look, that is not my opinion. My opinion is this is likely the low, but I can't trade it. I can't trade my opinion because I've been wrong a ton of times. I have to trade the charts. The chart has to first off break out of this 4340. If you want to be bullish, you have to see a breakout, a retracement, and a hold, and a new swing high. That's when you can start to get more bullish. I'm just starting to get less bearish. And you've heard me talk over the last week. I've already been going through the process of getting less bearish. But I cannot go bullish yet. I cannot be overweight on the bull side. I have to still be mildly bearish. All right, so that is my big talk. That's what I really wanted to get across with everyone this week, is that, look, that's my opinion. That's the bottom. We're likely going to, look, I don't think we have a lot of upside from here. We're at the end of the seasonality period, but you can't go bullish until the charts tell you to go bullish. Here we are looking at the Qs. These look a lot better. These held their gains. They did not make a new low. Held their gains, and we're now back above the 20-day moving average, and we're right in between these moving averages. If we can get above these moving average, test them, bounce up, then you can get bullish. So at this point, you have to be bearish. You still have to be bearish, just not as bearish as you were last week. Here are the bonds, and this is what we were talking about, the exhaustion we've seen. The news that came out on Friday was easily enough to make this bond market go higher, but it didn't. It's exhausted, likely going to pull back this week. So this week, the question is, how far will this rally go? Can it break above that resistance? Can it hold above that point? And can we start to build upon it? We won't know the answer to that until it does it. So at this point, you still must be leaning to the bear side. You can back off of that for sure, but that's still what the market is telling you. We are at the end of the seasonality. We'll be watching for it, but you can't go bullish yet. You just can't. This week on the schedule, the only thing that's really going to matter is the CPI report on Thursday. So we might have a bounce up until Thursday. If that news comes out and that CPI is hotter than expected, that could easily push us to another leg down. As I said, it is way too early to get bullish. It's just time to get less bearish. Okay, good. So technically speaking, we are still at a -3, and that's why I'm saying what I'm saying. Technically speaking, we still are below the 20, below the 50, and they're both sloping lower. We're still at a -3. I'm at a +1.5 for the week. I think we have a decent week next week, and that Thursday is going to determine whether this was the bottom or we have another leg to go. Next week, I will have a much more forceful stance on whether we are bullish or not. Let's jump into the sectors, because we did have some changes in the sectors that makes me that tells me where the good trades are. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years, and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. Let's take a look at the performance first, and take a look at this. This is just crazy. First of all, energy got obliterated again, down 5%. Let's just move that aside. Take a look at the standouts: technology, communication services, healthcare. Those three were positive. Utilities was down about 6% before it crawled its way back, only down 3%. Utilities and real estate are getting really hurt by higher interest rates. But take a look at everything else. Industrials, financials, consumer material, they bottomed out. They didn't really go down anymore. Let's take a look at each one of them individually and update them. Now, I'm just going to tell you right away as we go through these, the way I determined whether something was a -3 or a -2. And let me tell you why I'm making the distinction. There would have been about 9 sectors that are all -3. So I wanted to take those 9 sectors and be like, okay, these are the worst. And these are the just not as bad. So understand, I'm going to have -3s and -2s. Technically speaking, they're pretty much all negative threes. They're all below the moving averages, and the moving averages are sloping down. But I wanted to make a distinction of which ones are the absolute worst and which ones are just the worst. And the way I'm doing it is, did we make a new low this week? So as you can see here, this was last Friday's candle in utilities. Did we make a new low this week? Yeah, we did. So utility stays at a negative 3. It was negative 3 last week. It stays at a negative 3. Here we have communication services. Did we make a new low? We did not make a new low this week. And frankly, we actually broke out. We're now trading above the moving averages. We can actually give communication services a +1 at this point. Now look, this isn't a wild bullish call. This is just, it's mildly bullish at best. Let's take a look at real estate. Did real estate make a new low this week? The answer is yes, it did. Yes, it did. Made a new low, so we're keeping that at a negative 3. Industrials was at a negative 3 last week. Did we make a new low this week? The answer is yes, so we're going to keep that at a negative 3. Coming over here to healthcare. Now, healthcare is a funny one because it did make a new low, but take a look. We close all the way back up to the moving average. So healthcare is going to get a negative 2. Look, negative 2 is still very bad. It's just not the worst. Coming over here to financials. Financials made a new low this week, and we're still a mile away from moving averages. So that remains a negative 3. Coming on to consumer. Take a look. Consumer, did it make a new low this week? It did not. It's still terrible. It's still lousy. But look, it's just not the worst. So we're going to give it a negative 2 because it did not make a new low for the week. Technology, first off, did not make a new low for the week. Check that out. And here we are back in between the moving averages. That earns a 0 on technology. So technology actually looks pretty decent here, technically, when you take a look at it against everything else. Next up, to materials. Did materials make a new low? Yes. But take a look. It's all lower candles. It's all wicks, except for this one here. It's all wicks. Look, it's still terrible. We're going to keep it at a negative 3. Could you give it a negative 2? Sure. It doesn't really matter. It's still bearish. And energy. Energy last week was a +1. It is at a negative 2 here. It's absolutely lost its luster here. If oil comes back, this one might get back in favor, but until that happens, it's just not going to be there. Right, so this is where we were last week. And if you remember, everything was negative 2 and negative 3 last week as well. But I pushed over comm services and I pushed over consumer and I said, hey, look, even though these are negative 2s, they're looking better than everything else. Let's see what happened this week. We actually had comm services and energy trade place. So comm services goes up to a +1, and we have technology go to a 0. I'm going to leave consumer here at a 2+, or like a negative 1.5, a negative 2+ or a negative 1.5. It's still looking pretty good, but everything still looks pretty lousy altogether. So let's take a look at some potential trades this week. And I want to just go into what I'm doing here. I'm looking to get less bearish. So I had some bearish trades roll off this week, and I'm going to add a few bullish trades this week to bring my delta closer to 0. Comm services is by far the strongest sector, so this is where you should be looking for some bulls. And here is Google. Take a look at Google. Google is back to its high that it set September 1st. Remember where the market was September 1st? And then we went all the way down. Google decided somewhere in late September, said, you know what, I'm done going down. I'm going to go back up. So here we are right back up to this resistance area. Now look, communication services is a +1. The market is having a bear rally at the moment. This is where you don't get to be a hero. There's no reason at all to get super bullish here. It would actually be a total mistake. So how do you play this and not be super bullish? Well, this is where we love diagonal call spreads. So the 135, 140 diagonal call spread, we're going to go about 3 weeks for that 135, and we're going to sell this week's 140. So that's going to give us a risk graph with the peak at 140. So if this thing takes off and runs, guess what? You don't get anything above 140. 140 is our target on this one. If it goes past that, you'll make a little bit less. But look, this is a 1 week trade. On October 13th, you're going to look at it and decide what you want to do. If Google hangs out in this area, that's just fine. That's right in this meaty area of our risk graph. We're going to have a profit. And then on Friday, you get to decide, do you want to close it, or do you want to do another diagonal call spread for the next week, or do you just want to hold the 135 call? Gives you lots of possibilities to extend this trade. Next up is the industrial sector. I've got a lot of shorts in industrial, so I wanted to pick up a long here, and this is XPO Logistics. And this thing has been basing for a very, very long time after a big run in the summer. Remember, the market has been going down. This thing has just been churning, gathering up some steam, coiling up. If this market recovers, these are the kind of trades that take off. So how do I want to play it? If it was a different market, I would be much more bullish, but I'm going to look to that 80. Up to that 80 is going to be the target. So looking at the November monthlies, November 75s, sell the October monthly 80 diagonal call spread. If it takes off past 80, just sell it. That's going to be a nice profit. If it just hangs out in this area, you're still going to have a profit because a diagonal call spread is a positive theta trade. If it goes lower, always have your risk put in and make sure you exit at that point. Moving on to the financial sector next. I haven't made any trades in financials for a while, so I want to open one up, and I'm going to use this sector for a sideways play here. So I chose Coinbase, and I'm looking at this just for a week. I'm looking for 1 week to add on some theta onto my portfolio, and I'm saying, okay, where do I think this is going to be at the end of the week? And I'm saying, I think the market's going to go up a little bit, so I'm really looking right around this 81 area. So I'm going to make that the center of my butterfly. So I'm looking to make the 76, 81, 86 butterfly just for a week to make it be slightly bullish. So if this thing just floats up into that low 80s and hangs out there, that's going to be the best case scenario here for Coinbase. Going on to consumer, if you are in need of a short, here is a great looking short. This is Dollar General. And this is a kind of trade, we call this the March of Death. The March of Death, where something happens, it was already looking nasty, and then bad earnings. And you can see since that time, all it does is go sideways and then down. Sideways and then down. Now, a lot of people say, well, how far can this thing go? I've seen these things go to zero. I'm not saying Dollar General is going to zero, but I've seen these things just continually drop. These are the weakest stocks out there. So we want to play this on the short side. How do we want to play it? We understand that we might be at the end of the seasonality. So I'm looking to be very short term. I'm looking to go to that October 13th, 102, 104 bear call spread. That is not that much. Like, this is a $100 stock. You're playing $2 of that. You're probably going to bring in $1.20 in a credit. You'll have 80 cents of risk. And if it's above 104 by Friday, you lose the 80 cents. If it's below 102 by Friday, you make the $1.20. It's a very simple, straightforward trade. I'm keeping all my bearish trades on the shorter term side because of the seasonality. Let's finish this off with the technology sector. This is another one like communication services. It's looking really good here. Here the stocks is Alteryx, AYX on a high base. I love stocks like this that creep higher while the market is going lower. I mean, look at this. This thing has just crept higher the entire time this market has just been dropping like a stone. If this market can pick up, these things pop. I'm going to play this one a little bit more aggressively with the diagonal call spread. You can play diagonal call spreads more aggressively by simply moving up your upper strike. So now I'm looking at this 35.40. I'm looking way out here. 40 is going to be up here. If this thing runs, I can make a lot of money in this area between 38 and 40. If it takes off past 40, I don't make any. I lose a little bit. But again, I'm playing this one a little bit more bullish than I am the others, just because I really like this rising wedge here on the upside. All right, well, let's wrap up the trading part of our session. Maverick Traders, if you have trades you want to share with the rest of the group, you guys know where to go. Go onto the website, log in, go to the forum. We love to see discussion of all of our traders helping one another make some profits for the firm and for themselves. Let's go ahead and wrap this up. It's a bearish outlook. Look, I told you my opinion. I told you how I feel. And remember, 3 weeks ago, I told you I don't feel bearish, but the chart is telling me to be bearish, so I'm going to be bearish. Here I am 3 weeks later telling you I don't feel bearish, but the charts are telling me that until it's proven wrong that this is nothing than a bear rally, if this rally fails like all the others have failed, I need to stay with the bearish outlook. The chart's telling me to stay bearish. Understand, we are at the end of the seasonal weakness. I think it doesn't make sense to get bullish here. It makes sense to get less bearish, but not bullish. You have to wait for the charts to confirm. It's time to go bullish before you can go bullish. I've survived for 26 years as a trader waiting for those confirmations. Many times I've been completely wrong with my opinion. So I always follow the charts now. Everyone have a great weekend, and let's come to trade next week.